Monero is on the rise, and there are 5 positive signals telling us this is a short-term buy. When multiple signals fire long, we know that probability is on our side. The first signal, when price is trading above yesterday's close, shown by the dotted line, that's positive for bulls. It tells us buyers are currently willing to pay higher prices than they were just 24 hours ago. The second signal, we regard the 89 EMA as the line in the sand on any time frame. This is a 4-hour chart, and again, we are trading above the 89 EMA, adding weight to our buy. As long as price remains above this level, the short-term trend remains constructive. The third signal is generated by our proprietary indicator and confirmed by a market structure of higher highs and higher lows. Markets moving higher should continue producing higher highs and higher lows. As soon as that changes, we start questioning the strength of the move. The fourth signal is that the price is sitting above the 2026 anchored VWAP. This tells us price is currently trading above an important institutional reference point. And finally, the fifth signal is the Ichimoku, which has provided a positive TK cross. On its own, we never rely on a single signal, but when combined with the other 4 signals, the evidence becomes much stronger. The current price of Monero is 352.05, and in a moment, we will share our targets. If you enjoy this style of Fibonacci and swing trading analysis, subscribe to our channel, and we also produce a newsletter, link in description. Now, let's look at targets. As a minimum, we are looking for Monero to hit 436.73, but we have calculated our Fibonacci resistance zone, and that sits between 448.11 and 449.21. However, there is one obstacle standing in the way. For Monero to reach our targets, we would also need to see a break above the 2025 anchored VWAP, which could act as resistance. That sits just under 430. In terms of support, the Fibonacci support zone sits between 305.49 and 306.41, and below this is where our stop loss sits. Now, we also want to give you a bigger picture outlook, so let's zoom out. On the daily time frame, we are currently bouncing off a larger time frame trend line, which extends from the 15th August 234.95 low to the 6th February low at 279.22 and the current area around 6th and 7th June. Now, trend lines are weak signals and get broken often, but we want to make you aware of this as it could have a bearing on Monero's live price action. When multiple tools begin pointing to the same area, we always pay attention. The structural low on 6th February 2025 at 279.22 is a critical low to hold. The current low for Monero is on 7th June at 293.94, and it bounced straight back above the trend line. So far, it has not violated that 6th February low and remains above. That is important because many other cryptocurrencies have not been able to say the same. We saw earlier on the 4-hour chart that we have higher swing highs and higher swing lows. As we are currently long on Monero, we would want to see those swings translate to a daily higher time frame. This will be further confirmation of the move. If it is unable to produce that swing structure as it makes its way to our Fibonacci target, this is a sign of weakness. And that is how we measure the strength of open positions. So, to sum up, these are the levels we are looking at for Monero. First, the Fibonacci support must hold between 305.49 and 306.41. A break below leaves the pivotal swing low on 6th February 2026 at 279.22 exposed to be challenged. It should be noted that on many crypto charts, for example Bitcoin and Ethereum, their respective 6th February lows have already been broken. As long as Monero holds above its 6th February low, this is a sign of strength. Relative strength often reveals itself before price reaches major resistance levels. We have multiple signals confirming our buy trade. Price is sitting above the anchored VWAP, and the 4-hour chart has the right market structure of an uptrend. We now need to see the higher daily chart produce higher highs and higher lows for further confirmation. Our take-profit targets above are at the Fibonacci resistance zone between 448.11 and 449.21. And bear in mind, that would mean breaking above the 2025 anchored VWAP. If price gets to that area, we will be pulling our stops up in case that price region around 430 provides noticeable resistance. One final point to make is that like many crypto charts, the February range has dominated crypto price action for coming up to half of this year. This is clearly seen on this Monero chart, and it has to eventually test either the first February high at 436.66 or the 6th February low at 279.22. The market has spent months trapped between those two levels. Eventually, one side will win. One has to break, and when it does, we will be there to analyze the next move. We hope today's analysis has been informative to you, and don't forget to subscribe to our channel where we produce daily crypto trading analysis. See you for tomorrow's crypto analysis. Thanks for watching.